All right, so welcome back to the very last section here. So we already finished section 4, right? So now we're going to go ahead and finish at the last section here. So right here, 5 is going to be basic reports and views. So number 5 says describe the content and purpose of reports. So again, describe the content and purpose of financial reports. What are the 3 financial statements that we are obligated to, required to know? There's 3 and 3 only. What are your financial statements?
Profit and loss, balance sheet,
Oh my gosh,
and
my spelling.
the flow of cash.
Statement of cash flows.
Yeah.
Okay? What's the purpose of each one? So start with the profit and loss. What does the profit and loss do?
Tells you how much equity is left in your company.
Not equity.
Profit.
Profit.
Yeah.
But in terms of, instead of using the words that's already in the actual statement, how do you determine profitability?
Yeah, profitability. Gotcha.
How do you determine profitability?
Profit minus loss. I hate to say that, but
what determines a profit and what determines a loss is what I'm trying to get at.
Okay.
It's right after
sales.
You after you paid all your expenses and everything, you will show whether or not the business has a profit or a loss.
Revenues.
How do we determine whether a business made a profit or a loss? That's the question I'm asking. What are you subtracting from? What are you countering against? What determines profitability?
So would it be revenues?
Uh-huh.
Minus the cost.
Cost and
I would say
use your accounts. How many different types of accounts are there?
several.
There's only 5.
Oh, you're talking about assets and expenses and so
how do we determine profitability?
assets equal
No.
assets equals expenses plus. Okay, so you got to fix that for me because I had something in my head, but now it's all jumbled up.
Okay, so that's not how you determine profitability. Okay, so profitability, right? So that's what you would do this, right? You would use the profit and loss to determine whether whether your company is profitable, right? That's what we said. But what does it mean to be profitable? That literally means, did all of the revenues you generated cover all of the expenses you incurred during operations, right? That is the key word there. That's how you determine, right? Did all the money that you make, did it exceed the money that you spent? Therefore, if you made more money than you spent, then you earned a profit, right? But if you spent too much money versus the money that you generated, you took a loss, right? You paid more money than you made, right? That's how you determine profitability, is looking at your revenues and your expenses and comparing the two of them. Did you make more money than you spent. So that's the overall goal, right? Um, did you make more money than you spent? Okay, and that will answer whether you are profitable or not. This doesn't determine your equity. This determines your retained earnings or your income summary, right? Because this is a part of equity, but it isn't 100% equity. Because this profit and loss, right? If you have a profit, what can you do with it? This one you can determine, okay, whether whether you want to keep the money or reinvest in your company, right? Through equity. But remember, it's not 100% equity. It's a part of equity. And it's a very small part actually, because if you took a loss, right? You're going to take it out from equity. Because you yourself do not pay that loss. The company takes the loss. Okay, so you have to remember that, okay? But the profit, right, if you're a corporation and you made a profit, right, you could choose to distribute that through your dividends. Pay the people who invested in you, right, their share of the profit. If not, you can make the executive decision to reinvest all that money so you can build your company bigger. You can provide more products and services, get more vendors connected to you. You could also, expand your business, right? Maybe have a new department, maybe have a new line of business, whatever you want to do. So that's why reinvesting into your company is a powerful tool, because not only can you expand your company, right? Ultimately, you can pay back the people you owe, right? So in this case, this is a small section of equity, but it isn't equity itself, right? Because you are personally adding that value to your company, not the other way around, okay? So in this case, that is how you determine profitability and why you run reports to determine whether you spent more money or you earned more money than you spent. Okay, so that's the ultimate goal there. All right, what about your balance sheet? What does your balance sheet do? Why would you run a balance sheet?
Because it shows where your money's at.
What do you mean by where your money's at?
Like when we did that last journal entry, it shows what was in equity. It shows what was in our, well, owner's equity, owner's investment. It tells you where your money's at. It shows everything where your money's at.
Mm, you touched
A
part
very
of
small
it.
part. Yeah, small part.
But what does the balance sheet actually do for you? You say it shows you where your money's at.
What it's
In
invested in.
terms, okay, we got invested in. What else?
Um,
It shows how your money was spent.
No, it doesn't show you what.
um, so like it'll show what's invested in inventory, what's invested in your labor. Just shows all of your chart of accounts, what's invested in each part.
Now, what part of the chart of accounts are we referring to? There's a specific equation that you must uphold for a balance sheet, hence the word balance sheet.
Credits versus debits.
No, that's a trial balance.
Okay. Okay, then it would be assets equals expenses plus liabilities
Not expenses.
equals Equity plus liability?
Liabilities plus equity. Excellent.
Yeah.
Okay. That is the ultimate goal of your balance sheet, is to test the accounting equation. Okay. So again, test accounting equation. Sorry, accounting equation. Okay. So this is determining, right, how much you own. Right? Whether it's investing in assets, right? Fixed assets, equipment, whatever, land, right? So that part were somewhat correct there. Okay? In equipment, land, okay? Machinery, okay? Inventory, okay? And it also takes a look at how much you owe people, right? People, vendors, employees, right? And even sometimes customers, right? Because yes, you can't owe customers services, okay? And of course, we also are looking at how much your company is worth, right? Through equity, right? Because equity determines your own investment into the company, meaning you're putting your own money into the company, right? Investments into the company, right? Or people who puts money into your company. You're looking at you're looking at your profit and loss, or in this case, we call that retained earnings, right? Did you earn a profit? That's your retained earnings. If you took a loss, that's also your retained earnings, right? Because that's ultimately going to influence the value of your company, right? Whether you choose to reinvest into your company or whether you take a loss to your company. All right, and you're also looking at any dividends paid. Dividends paid, or owners withdraw, right? When you take away from the company's money, right? That's ultimately going to take a look at your financial positioning, right? Where did you put the money? Where did you invest it into? How much money do you owe other people, and so on and so forth. So ultimately, you're ultimately testing the accounting equation. Okay? So that's why you would use a balance sheet. What is the state? Why would you use the statement of cash flows?
Because it shows where your money went.
Went is correct, and what else?
And where it came from.
Yes, we're looking at actual cash money flowing into the business and where it flows out of the business. Okay, so that means looking at physical cash. So this is, again, we say that this is a combination between your profit and loss, and balance sheet, right? Because we're basically looking at so in this case, we're looking at the income that you generated, right? and we're dispersing it into 3 main core of operations, right? So you can start out with your net income first, usually, or net loss, and you're going to divide them amongst your operating activities, your investing activities, and your financing activities. Okay, so that's going to be determining, right? Brief little overview. Operating is going to include your current and other assets and current liabilities. Your investing activities is going to be your fixed assets, and then your financing activities is going to be your long-term liabilities and your equity. Okay, so that's what I mean by it's a combination between the two. Now we're looking at actual physical cash. So if you have cash from operations that you've never collected, guess what? That money's gonna not be included into the net income. So you have to subtract it out, right? And any money that you haven't paid yet, you still have that money. So therefore, you're gonna add that back into your net income. So that's the idea of that. There is you're going to take the amount that you earned, and you're going to go through and divide it amongst the 3 cases of activities, which are your okay, and then we're going to match cash balance, okay, from beginning, right, of beginning of year, and then that should match cash balance to the end of the year. Okay, so that's also important too. So you actually see where your cash is actually physically going. Okay, so there you go. That's a statement of cash flows. All right, describe and the content and purpose of money in reports and money out reports. So this is going to be mostly for the 2 types of accounts. The 2 types of reports, right? These financial statements are going to be accounting reports, right? These money in and money out is going to determine your business management reports, okay? Okay, which will determine your money in, right? So that means, right, looking at your sales information, sales reports, okay, your accounts receivable reports, your customers reports, okay. So make sure you go through each and every one. So that means every single chapter that we've gone through, from chapters 1 all the way through chapter 10. You're going to need to be able to fill out this information here. So describe the content and the purpose of money in reports. Again, that's all I can think about right now. While your money out reports are going to be your bills reports, or sorry, in case it's going to be accounts payable reports. Sorry. Okay, you're going to be looking at sales reports, invoice reports. This one's going to be expenses reports. Okay, you're going to also have your vendors reports, right? And then your money out is going to be your employee reports. So anything that has to do with employee/payroll reports. Okay, I'm trying to go through all the chapters. So chapter 4 was your expenses. Chapter 2 was setting up. Chapter 3 was sales. Chapter 5 was sales and those reports, but those are mostly accounting reports. Chapter 6 is bank reports. Those are more of accounts. Chapter 7 was reports itself. Chapter 8 is chapter 9 is billable, so estimates. So it's going to be more for this customers. Chapter 10 was employees. So yeah, that's most of them here. If not, if I missed any reports or any chapters, you can go into every single chapter. At the very end of the chapter, you should have those types of reports. Okay. So again, I'm not going to go through all of them just because these are business management. We've gone through a pretty good example of each and every single one. 5.2, customizing and deliver standard reports. Okay, so how do you customize standard reports? And of course, how do you modify reports delivery format? So that means, okay, customizing standard reports, right? How do you customize a report? Well, that's straightforward, right? You can customize the columns that you want to view on a or display, excuse me, columns you want to display, right? You can filter certain certain groups of people or transactions, right? You can customize them by date, right? And you can either do it by cash or accrual basis. Okay, we took a look at this in chapter 7, so you should be able to do that, right? And you can, again, that's pretty much it. Now, delivery options. What are your delivery options? Well, you can email your report. You can email your reports. You can download them either to PDF, or Excel. Now, the importance of using Excel is Excel allows you to further customize colors, tables, formats, graphs. Okay, it allows you to do all of that. Okay, you can print the materials out, okay, or reports, and I think that's majority of it, right? Yeah, you can print, you can email them, you can send as a PDF or export them as Excel. Yep. 5.3, last section, okay, describe the content of audit logs. So what's the purpose of an audit log? I showed you this in chapter 5, right? An audit log, right, shows, go ahead.
Every single transaction you've done.
In terms of what?
All the transactions that are entered into the QuickBooks.
And
you're able to access them again through the audit log.
oh, okay. Okay. Are you able to view who entered in those transactions?
I haven't seen that.
Yes,
but
you
then
can.
Again, I'm the only one using it.
So in this case, the audit log also allows to see who entered in that transaction. So basically, an audit log, what it does is, yes, it keeps a paper trail or a track record of every transaction that's been entered. It timestamps it, it dates it, and it also tells you who has done it. So in this case, the audit trail log basically is a activity log for anybody who accesses that company QuickBooks file. That's what it is. So shows the activity log of who accesses the company file and what transactions were entered, and you also have the ability to access those transactions. Okay, so let's go ahead and take a visit of that audit log. How do I get there? There are two ways you can get there. Well, actually, yeah, two ways you can get there, but I like to go to up here in the gear icon and click on activity logs. Okay, you can run an activity log report, right? But in this case, I like to go up to the gear icon and see, look, it tells me who did it. It's me. Okay? So again, it tells you who's done it, when have they done it, and the exact time. Okay? And what did I do? So the last thing I did was sign in. Great. Right? And the one before that was I entered in an account loans. Then you could view them, okay? You could view your transactions. But in this case, the last thing that I did here was login, right? It gives you the account activity of who has access to the file, okay? It's not just only strictly just transactions, but you can use it to view the transactions. Yeah, so if you're entering transactions one at a time, and then you forgot what you did last time, and you're not able to find it or locate it, you could just simply go to your audit log and locate that exact transaction, because it tells you when you entered it in an exact time as well. Okay? So there you go. Right? And then lastly, it says right here, describe the content and functionality of dashboards. So again, right, the dashboards has two features, right? You got the getting things done section, and then you have the business overview. Okay, so what does the getting things done do? It basically gives you a quick access to money in and money out transactions. So you're able to look at your customer. So let me. Okay, you are able to look at your customers list, vendors list, employees list, right? And you get to enter in invoices, receive payments, enter bills, view bank transactions, right? So basically, it is quick access tool, but it's also a graphic depiction of the flow of money in a business, right? And then what does the business overview do? It gives you an overall view of the current company's financial position. Okay, meaning you get to take a look at your income reports, right, or graph, right? Right? You get to look at your expenses graph, right? You get to look at your income. I'm sorry, you get to look at your, profit and loss. And you're also able to look at your banking, Okay, what am I talking about? So if I were to go to my business overview on my dashboard, right here, I literally get to see where my overview is for my current um, financial positioning, right? Here's the profit and loss. Here's the expenses. Now this is up to current. That's why I said current. And you can toggle this to say not the last 30 days, but let's say I want to see this fiscal year, this month, this fiscal quarter, this fiscal year. So there, I get to see my expenses that I incurred for the month for this year. I get to see my banking situation going on there. Okay, I get to see all of that all in one screen, right? And they're all in graph form, so it's easy to identify, right? Okay, so that's what you get there. Okay. Now, I noticed that there's a few things that are kind of missing here. I would definitely explore the options of, navigation. Okay, how do you navigate? How do you navigate QuickBooks Online, right? How do you do that, right? You could do that through the left navigation bar, which takes you to all your centers. Okay, let me go back to here. Like, I would encourage you to go through how to navigate QuickBooks Online through the left navigation bar, right, which takes you to the centers. Okay. I also want you to encourage you to view the gear icon, which allows you to set up most things in QuickBooks. So such as your lists, your chart of accounts, your account settings, your importing data, all of that, right? Again, we took a look at that in chapter 2. So in this case, let me put in here chapter 2. Okay? And I would also encourage you to explore the plus new icon because that's our best friend, right? That is where we enter in majority of our transactions. Okay? I would encourage you to go through the report section and determine which ones are the most important reports. So again, these 3 are the main core ones, but that doesn't mean you should leave out, the trial balance, the general ledger, all of those types of reports either, okay? And again, explore chapter 7 and explore all the chapters that have all those business management ones. Another one too I noticed that you didn't have was bank reconciliations. So I encourage you to go through that too, because that was a huge chunk of chapter 6. Okay, so bank reconciliations, okay? Which I'm going to go ahead and put under banking here. Okay, over here, banking. So I'm going to add in a bank reconciliation. Okay. Yeah, that's just the majority of them. We already gone through the products and the products that QuickBooks Online offers, so you are pretty straightforward there, okay? And that concludes the study guide for the certification test for your exam here, okay?